Cool. Hi, George. Sorry about the confusion with the time, man. I'm very sorry.
Oh, no problem. My fault. Morning, Michael.
Cool, man. Cool. Um, I'll just let people log in. Okay, so I'm gonna rock and roll. Last couple of times I kind of felt that I talked for a little bit less time, and I asked for people for Q&A, and there wasn't a lot of um, people wanting to ask questions. So today I'm going to talk for about 10 minutes, and then kind of, we'll try and see how it goes. Um, so I wanted to title this talk today that a bear market is coming, and what is deep value returns going to do about it? Because this is a question that has been surfacing a lot in the past few days. And, you know, generally speaking, I get two kinds of questions. It's either why is my stock down? Or what can I buy now? And it kind of depends on the mood of the market. And, you know, neither of those questions are the right questions. Um, it's, you know, investing is hard, right? It's really difficult, but you can make it a little bit easier for yourself if you come in with the right expectations. And by that, I mean, if you try to grow as fast as possible, it's going to blow up. It's just going to blow up. It's going to blow up. And, you know, you'll be stuck and you'll always be in the same circumstances trying to go as fast as possible. And if you just slow it down a tiny little bit, you will see that actually this does work. And it feels fantastic when it works. It feels fantastic. Um, but I'm going to revert back to, the topic that I want to talk about, like what is deep value returns going to do for the subscribers when the bear market comes? And, you know, nobody can time those kind of things. Nobody can time. Nobody. But at the same time, whenever there are these market dislocations, the first thing to understand is that it doesn't last forever. It happens. Stocks do go down as well as up, but they don't last forever. The second thing is that timing the bottom on a stock is really, really tough. It's really tough. And, that is not a game that is easy to do in real time. You can look back and look at charts and say, oh, this would have been a good time. But in the heat of the moment, it's really tough, man. It's really flipping tough to to be able to have that strength of character. Because one thing, when you start out as a novice investor, you have a lot of bravado. You haven't been burned before, and you're fearless, right? You're kind of like, oh, buy the dip, sell the rip, like blah 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 blah. But once you've gone through a few of these kind of business cycles, you kind of get a bit more apprehensive, and the pendulum swings to the other way. So how can I help you as a subscriber to go? It's not like full bravado, but it's not reckless either. There's a middle ground, and that middle ground, there are some guideposts that we can put in place. So I believe that whenever these dislocations happen, by having 20 stocks in the portfolio, I believe it kind of helps you navigate these periods. Um, and it's and this is ironic that when I recommended Teledoc, I wanted it as a safe investment in the terms of that wouldn't be as susceptible to interest rates fluctuations. So the growthier names, if interest rates don't come down as people expect them, they just melt like ice cubes. But these kind of more boring names like liquidity services or Teladoc, they're not really being priced as a growth story. And in my mind, when I recommended Teladoc, it would just be kind of, as a hedge against the growthier names. Um, Obviously, I'm looking at it quite favorably that it worked out quite quickly. Um, I'm quite happy to make that money. And then somebody says, "Oh, it's earnings the next Wednesday. Shall I just go into earnings of it?" And I'm like, "Look, there are different ways you can approach investing. In my mind, when you buy something that hasn't got very high expectations, you don't need to be a genius. You can kind of say, oh, listen, I don't really know how it's going to work out, but I'm paying 10 times free cash flow. And, this is a pitch that I've had with Teladoc for like every week. I come here and I talk about Teladoc, and then people are like, yeah, yeah, whatever. Now, but tell me about like super micro, but tell me something cool, about super micro. And I'm like, yeah, but like, Teladoc is like priced at 10 times free cash flow. And if you don't expect any growth from it and you just were patient enough, hypothetically speaking, that you could wait 10 years out, after the 10th year with no growth, whatever it makes afterwards is for free. Like for the next like 10, 15 years, whatever cash flows it makes is free. It's free money. So that's a setup, right? That you think, okay, the expectations are relatively low. But once the share price comes up 40%, then you need to come with more clarity into how it's going to unfold going forward. And it's a different type of situation there when a stock has already rallied 40% going into earnings. It's kind of different. It's not impossible. I did that with intuitive machines, Luna. It's not an impossible circumstances that you have to think about how much it's rallied into it, but you do at a certain thing have to circle back. Listen, the business isn't growing anymore. So if it hasn't got that much growth and you've already squeezed out 40% out of it or 50% or whatever, it's like, okay, man, like let's not be a hero. And the advantage of this style of investing is that you are constantly moving around these rocks. And it's like a kind of a traditional Buffett approach when you're kind of buying stuff cheap at 50-cent dollars stocks and you kind of flip in these and you flip that one and you flip that one. And you just kind of churn through these names quite quickly. But even that experience to not have attachment to something that is working out favorably, even that experience takes a certain amount of maturity because when the stock is going up you feel really great, it feels great, you're talking to your wife about it and like, oh my god, I like oh yeah, even my wife talks about it. It's like feels great to talk about those kind of things. But the market doesn't care like that you feel great. It's a zero sum game. And you know, you need to always think, will the future investor be willing to underwrite the stock now? Like, if I forward the clock and I think about, let's go into the summer of 2025, will the future investor be as passionate to buy it at that point as I was to buy it in October? You have to think about these kind of things because that's who, if you haven't got anyone to sell the business onto, that's it. The thesis doesn't work out. So you always have to be thinking forward. You have to try and think, and it's difficult, because the market when it's ripping higher is like, you don't want to think about that. It's just like pedal to the metal, and you just want to buy, buy, buy. But you got to just think about parking um, the cash and parking your capital. That's really what's really, really important. You play this game in your mind, trying your best to think, I've got to survive tomorrow. I've got to play a game in a situation where I can come back tomorrow. And if you're able to come back tomorrow and you play this game again, the longer you keep playing it, the better the results are going to be. But you've got to put yourself in a position where you just kind of, park to the side and sell into strength because it's something that takes a lot of experience, But once you kind of shift your mind slightly and you think of it, let's say, as buying when no one sees the expectations of the business and selling when people really can only see the expectations of the business, selling into strength allows you as the investor not to have a stop loss. And for me, this is a really important part of my strategy, that I don't walk around with a stop loss. And you know, it's because of these situations. And when I recommended, you can, if people can look back afterwards as a share price, when I recommended Teladoc, it was just below $10, and it moved to 12, and it went from 12 back to 9. So even if you had a stop loss at the price that you originally bought, you would have hit a stop loss. And would you really have the conviction, middle of January to buy into it again? You wouldn't. It's easy to say in hindsight that you would, but you wouldn't. So it's not about trying to rush the process, but and it's a difficult ask, because I'm asking people to say, listen, follow this pitch, buy into it now, and then sit on your hands and try not to look at the share price. And it's a difficult ask, because you're asking people to be actioning what you recommend and then doing nothing. And it's a tough ask, because people that follow the trade alerts, they kind of like action and they want to do something, and the stock is moving against you and you get nervous and you're bored and you want to sell it. And it's a difficult ask, but if you stick around for a little while, you stick around a couple of months and you start to make money, you're like, you know what, okay, I'm going to try this. And what I feel that is a reasonable ask of people is, listen, every Monday I put out 5 stocks that I think are worthwhile buying. And this Monday, well, the markets were closed, and just to make things more interesting, I kind of made a mistake in a typo that I put the same stock twice. But anyway, that aside, I kind of corrected that mistake. But I put 5 stocks because I think that it's fair for both parties, that if you buy 5 stocks and equally weight them and give them time. Okay, that's all I wanted to ramble on about. I've rambled on for longer than 10 minutes that I wanted to. I'm going to open it up for some questions if anyone wants to ask anything.
Hey, Michael, it's Sandy again.
Oh, hi, Sandy. How you doing?
Good, good. I'm just curious about what do you have in your bullpen? How many stocks do you keep, that you're close to making a recommendation on, but you haven't quite yet?
Mhm.
Is it a large number, a small number? And
Normally about 2, maybe 3. At this moment in time, I don't have anything. I run a very, very small watch list because I don't want noise in my life. I want to be focused. I want to be disciplined. And people talk about discipline, like people love to kind of say these kind of things, but you need clarity in your mind, and you need to be able to visualize your portfolio, and that's hard work. Okay, I'm like I kind of joke about it that Mondays the market is closed and I'm still kind of getting up and working hard on it. And my wife's like, like, just take it easy, man. No one's going to be looking. Just have a lay. And I'm saying, no, but it's important. You need to visualize these 20 businesses, because something is always happening. So I don't have a lot of stocks in watch list, but I like to keep a track record in terms of, I like to write up my thoughts, and I write it for myself. And people kind of get really frustrated. Oh, you wrote about this stock and you don't buy it and you're bullish and this. And I'm writing for myself, man. I'm in a fortunate position that I work really hard and I make more than enough money for my subscribers, and I write for myself. So, like, I honestly couldn't care, but you need to kill the noise. And people kind of love to say crap. And, you need to have a focus in your mind where you can get into a state of flow, and you need to be able to say, there's a Charlie Munger. I love quoting Charlie Munger. So take a simple idea and take it seriously. So just kind of focus it down to what you're really trying to do and spend a lot of time on that one thing. Um, yeah. Um, yeah. Did that
and so
answer your question?
what's the trigger then for you to go from having your three stocks to
Mhm.
actually choosing one? Like
Yeah.
what typically is your trigger?
So I'm normally, if possible, my 5-star setup is this. When I look at an earnings report and I was wrong, that's my best setup. Like you give me that and I smash it. Like I did it to Palantir, and like those are my best ones. But they're not often enough that I look at something and I'm like, actually, that was wrong. What I thought. Let's go back on it and let's recommend. Those are few. They don't happen very often. The second kind of, let's say, 4-star setup is really where I say to myself, whoa, this business is growing at a rate that is substantially faster than people expected. That's a 4-star setup. Generally speaking, if possible, I try to look for businesses where I believe that next year, looking out 12 months, they're going to make a lot more free cash flow. You can call it profits. You can say they're going to be much more profitable next year. I look at free cash flow, but this is just a term. So that's a 4-star setup when I kind of see, okay, whoa, this business is going to make so much more money than people had expected. And the stock rallies up, let's say 20 or 30% on that morning. Okay. And that doesn't matter to me. It can even rally up 50%. I look like you do, and I think, okay, after the stock has rallied 50%, this is what the market cap is now. Am I willing to believe that in 12 months' time, someone is willing to buy that business from me at, let's say, at a 60% increase from where it is now? I think myself, would I be willing to buy that business in the future at 60% higher than the, let's say the stock jumped 40%. So from that point, 40% up 60%, would I be willing to buy that business at that price point? And if I'm willing to buy it, then I believe someone else will be willing to buy it. That could work out. Does that kind of answer your question? Obviously, in the ideal circumstances, I would just go for the 5-star setup. But like things like Peloton, they're rare. Things like they just don't happen that often. Like Palantir was a great one, but they're not often, and you can't just like build a portfolio on the times that I'm wrong in a year. It's just not enough.
Okay, thanks.
Thank you for the question. It's a good question. It does come up quite often to me, particularly now. It's kind of in the thick of the earnings season, and people are like, "Oh, what's on your watch list?" And I'm like, "No, no, don't get distracted. Remain focused." I feel that investors. I have this argument with my wife all the time, and you have to excuse me because I just this is something that happens all the time. I don't know with my wife. I have this argument. It's like, do people? She believes that people actually just want quick money, and I believe people want action from the market. And we kind of have this kind of discussion backwards and forwards, and I don't know what the answer is. But people feel like just because something is happening in the market that it invalidates what you got in the portfolio right now. You can have something in the portfolio that is actually really, really good, but because you're kind of familiar with it, it's like it doesn't excite you. The share price has been going out sideways for like 2 months. Like it's not exciting. But every so often these things re-rate quite quickly. I gave the example this morning about Teledoc. It was like going sideways for like 3 months, and then like in like 3 weeks, it's up 50%. So I can't time these things. So I don't like to have too many things on my watch list, but it's a very good question. Thank you for asking it, Sandy. Thanks.
Hey, Michael, I have a question.
Hello, how you doing?
Good, good. How are you? This is Haji, by the way.
I know, yeah.
So, in related to Sandy's question, uh, let's say that if we like possible stock in DVR, and if
Yeah.
you like you to review, do you consider, let's say, if we provide you, like some little bit of research, would you consider to review those, or you just, I mean, like us, don't worry, you guys, don't worry, I will do it by myself.
No, I review them all the time. I'm like an addict.
Okay.
I'm addicted. I'm completely addicted to this game.
No,
No,
I mean, if we suggest you something, would you review those, or like that was actually my
oh, I see. If you suggest something to me,
yes,
oh
like if
yeah,
we
so
ask you, hey Mike, I
um,
mean this might be, I don't know, maybe something valuable based on like what I learned, and maybe, hey, let me take a look at it, or no, this is good or this is not good, or like, are you open for us to give you some possible stock suggestion?
I generally avoid that. And the reason is that,
Okay.
let's say I look at it, okay, and I think, well, this isn't a great business, hypothetically speaking, okay? I say, oh, this isn't particularly great because of X, Y, and Z in my mind. And then I say that to you, and then over the next 2, 3 weeks, this thing's up 100%. I'll look like an idiot. And like, what's the upside for me? Do you know what I mean?
Yeah,
I
makes
don't
sense.
there's enough risk, quote unquote, risk on the table for me. I don't need to kind of be a hero and kind of have an opinion on everything. I have this quote that I like to use that you have a lukewarm ideas, you get lukewarm performance, and top ideas get top performance, because I don't want that much noise. You know, I'm just trying to kind of narrow it down because there's so much happening, there's so much happening in the market at all the time that if I kind of say, oh, I don't think that XYZ that you recommend to me is great, you know, and then it rallies, I feel like an idiot and you're not going to like me. And, you know, it's just not worth it. You know what I mean?
Thank you.
Sorry. Does anyone else want to ask any questions?
Hey, Michael, it's Kevin Frazier from Maryland.
Hello, Kevin.
Hey, how you doing? Any expectations for the Nibius earnings call for tomorrow, or have you looked into that, or do you ever sort of foreshadow these type events?
Yeah, so it's a very difficult call because it's kind of very close to my price target. So I kind of feel like really anxious going into the earnings because of that. Given the choice, I would have probably just exited this position, but it's not quite at the price target. So I've been very fortunate, you know, with my timing on this one. But yeah, I feel that, you know, with Nibius particularly at the moment, the investors just want to hear that everything is still going to plan, because as I'm sure you know, all this kind of question mark over hyperscale demand, everyone's like, oh, is the hyperscale thesis still working out or not? I don't know if you follow Astera Labs, and they kind of like, the market didn't like that particularly much, the earnings, even though their growth is really, really strong. And it goes back to that thing that you can have a stock like Nibius that is rallying hard into earnings. They deliver exceptional earnings and guidance, and the stock just sells off on the back of that being priced, you know, buy the rumor, sell the news. But I think that adds a different level of complexity to my strategy. It doesn't sound sexy, but I believe just kind of slowing it down slightly. Let's say hypothetically, okay, Nibius comes out, fantastic earnings, blah, blah, stock is down 20%. And if I say to myself, okay, do I really need to react to that? Or can I just afford to sit on my hands for a couple of months? Often cases, I've seen this so many times, I'm sure you've seen this as well, so many times, the company reports earnings, the stock plummets, 30 days later, it's back to where it was. I've seen this time and time and time again for no news. Like the stock plummets and then it kind of comes back. So the stock plummets on the back of earnings. 30 days later, everyone's moved on to the next shiny thing and the stock is back to where it was. So I don't like to play that game of how is the stock going to react post earnings. It's much better, and it's not as sexy, but it's much better to just kind of sit on your hands and just give it time, you know, just give it time.
Thank you.
I know it's not the answer that you wanted to hear, but it's just the
Oh, no,
frankest answer.
it's what I needed to hear.
Yeah, it's just the frankest answer I can give.
Yeah.
Look, I'll give you an example because it's just the top of my mind, and I'll just mention this as an example. In my personal opinion, Supermicro's results were atrocious, in my personal opinion. And yet, the stock is rallying up. So, you know, sometimes it's the opposite. Like, it's a relief. People just want to find out, okay, the earnings are bad, but it's just this bad. And that gives the people the ability to quantify the stock going forward. You know what I mean? So sometimes even the bad news can be perceived by the market as a good news because it kind of says, okay, it's just this bad. So coming back to Nibius, like it's a tough one because it's so close to my price point. In the ideal scenario, of course, the stock wouldn't have any fireworks, and just give it a few more months, and I'd be able to exit it. But just have to. This is the business that we're in, right? Things that blow up all the time, and you just have to kind of, bite down and grind forward.
Thanks again. I appreciate everything you do for us.
Thank you so much. Thank you. I'll take this question from Patrick, if anyone minds. So he says, at this point in the market, what is a reasonable cash position? So the advantage of my strategy is that I'm often kind of coming in and out of cash. Generally speaking, I like to have at least 10% in cash. And up until Friday, or let's say this morning, I was fully invested. That is not my favorable setup. I generally like to have at least 10% cash because, I had this quote that is a kind of, it's a bit silly, but I made it up, so I kind of walk with it, that cash is like oxygen, and you don't really think about it most of the time, apart from when you need it, kind of shortness of breath, SOB. It's kind of like you don't really worry that much about it, but when you need it, man, you really, really, really need it. So I just kind of feel to myself that it's just better to have a tiny bit, just a tiny bit, like gives you so much breathing space. And also it's about being able to have the right temperament that when you have a tiny bit of cash, it gives you some breathing space. Let's say, pretend for the sake of our discussion, that the market just kind of tanks tomorrow or tonight or whatever. And you have a little bit of cash, it gives you like that bit of sanity that it's going to be okay, that you don't need to do anything because you have that little bit of cash on the side. So I'm not doing what I'm preaching, but I'm trying to get. I would like to ideally get rid of something else in the portfolio. Maybe this other stock, Dave has done quite well for me. Maybe move that. Maybe I get lucky and something else comes close to the price target. That'll be great. I don't know how it will unfold, of course, but I prefer to have a tiny bit of breathing space. Any other questions that anyone wants to ask?
Not necessarily a question. This is Haji again, Michael. But I like the idea of like having some cash aside, because this is my personal perspective, whether you like it or not, or whether it's applicable or not. But like back in a couple of weeks ago when we had the DeepSeek mania, and then on Monday morning, great sell-off, and NBIS and Credo, I may be wrong. They dropped so dramatically, and then I had some cash aside, and I had a chance to purchase a little bit more because I wasn't in my 5%.
Yeah.
So that was a good practice for me. But I mean, if I didn't have a cash, the opportunity was like the God. I mean, I'm
That's
glad.
a very valid point. But also you got to remember, okay, and I get the impression, you're at home, you work from home, and you got a lot of free time, and you don't have to react to the market. And this is part of the journey to mature as well. Think about the risk reward like this. How much risk am I willing to accept at this moment in time? So let's say, for the sake of discussion, let's say a stock goes down, let's say 50%, and you say, okay, I already got, let's say 10K on this, and it goes up 50%, it's 5K that I'm going to lose. How is that going to affect me as a person? So thinking in this term, how much risk am I willing to accept really helps, because you don't have to have an opinion on everything. The stocks plummeted on the back of the DeepSeek. The whole hyperscale sector sold off, but it's okay. You don't have to do anything about it. Obviously, you stand here and you're proud of yourself because you bought a dip and now it's back up and you feel great. And this is the type of market environment that we're in that's very forgiving, super forgiving. Anytime that you buy a stock that is going down, you look like a hero like 2-3 weeks later. But it's okay not to do anything. And it takes a certain level of drive and grind to learn that as well, to work on yourself, to say, it's okay. I don't have to react to this. And it's difficult. It's difficult. And I don't know how to explain it because I've been in that situation many times where I kind of felt like, okay, I know more than the market. And any time that you come into the market with that attitude of step in, this is my ego, I've got it, I got it, the market just kills you. And I was saying at the beginning of the discussion, like the novice investor is all about like, let's go, let's go, let's go. And then the pendulum swings. And once you've been burnt a few times, you're like, oh my God, I'm really fearful. I don't know, the bear market is coming. But the holy grail is that middle part where you kind of like, you're not reckless, but you're not too fearful as well. You kind of have a vision of what is the potential, but you don't have to always do something about it. Do you know what I mean?
Yeah.
I know it's a really kind of gray area. It's kind of like a really finite line. But if you don't take anything else, like just think about that. You don't always have to have an opinion and do something about it. Do you know what I mean?
Yep.
It's okay
Sure.
to sometimes just sit on your hands. And it doesn't sound sexy. I know that. I know that. Yeah. And also, when that happened, I wrote, I actually titled it Nebius and Credo 4, What Panic, What to Do Now? Because I also kind of said, this is an abnormal thing. And I wrote about it that morning. I said, okay, I think that this is a good time to buy. And also, I feel quite proud of myself. But I try to avoid those knee-jerk reactions. I try and kind of stay away from it. Of course, sometimes I do have that kind of idea, but I do try and stay away from it. And I recommend, if possible, that you do it, if possible.
Thanks.
Okay. If there's no other questions, I'll just wrap it up. If no one else wants to ask anything. Okay. Thank you very much, everyone. I really appreciate your time, and I'll see you next Tuesday. Next Tuesday will be
Thank you,
early.
Michael.
Thank you very much. Bye-bye. Bye-bye.